Welcome to the lounge and the indices report, and I just would like to start with the Australian market, and in that I would also like to start with some stocks, the CBA, ANZ and BHP, and then move on to the ASX 200. And the reason for that is to stock obviously drives the indices, and understanding some of the wave counts within the main movers gives us an idea of what we can expect from the index itself. And then we'll move on to the other indices, starting with CBA, which is a bit of a leader in our local market. And on this daily chart here, you can see that we've got the wave count to the upside, and we're looking here at minor wave 1, back for minor wave 2, finding nice retested support on 80. And this is kind of a bit of a good setup really in terms of trading, because the market's moved up, run out of breath, come back, supported on the closest largest number, and technically we can take out either that high or secondary high here to move into this area here. That's kind of a safe entry in most normal cases, and I just thought I'd point that out. Of course, if you know where you are, you can get in and do whatever you need to do at any time really, but sometimes it's just nice to have a nice safe entry. Within that though, from wave 2 here up to wave 3 here, we're looking for 5 waves: the 1, the 2, the 3, the 4, and the 5 up through to here. 88 is a profit-taking number. 8's a profit-taking number because it's an even number, and it's normally an even number before the next whole number, in this case 90. So it's just an obvious place to people think in even numbers before odd numbers, and yeah, so there's nothing mystical about that. And then number 3 here, minor wave 3 here. So we're looking for 1, 2, 3, minor wave 4, which can pull back 38.2% of wave 3 here, and we'll get to that when we need to, and then up for wave 5. Now 90 is a medium level, so 88 and 90 will play a strong part in the corrective pattern across that particular level there. Main point here is that this market is to the upside, and we'll see other stocks, other banking stocks similar to this. One of the other patterns in the banking sector is, well, ANZ here. If I can just bring this up a little bit here. Didn't realise that was out. I might just set that a bit here before, so I'll know where that is next time and set that up, and I'll just save that. But the main point here is that with this pattern on, this is a weekly chart here, bear in mind as well, and it's also a wave 4, and in wave 4s it's quite typical to have triangles in wave 4. Okay, and triangles are essentially a 5-wave structure, with each wave being 3 waves inside that particular structure. So I do think that we've got a wave 4 here, and I do think that it is a triangle starting across here in terms of an A and a B and a C and a D and an E here, then up for 1, back for 2, 3, 4 and 5, moving higher through here. How far that will go, we will see. Normally we can, the traditional thing is to take one of these lengths here and pop that over to here, so that will give us, up in that direction there, but we'll track it up there. But this is a different count from CBA, so some of the other banking stocks have got this pattern as well, and that's why I thought that I would just bring that into the fold here. And just looking at this here as well, in terms of the triangle pattern on the on the 2 hour here, we can see that that this is the end of the triangle here as wave E. And if we just bring this back, I'll just wait till it saves. I've got a lot of charts and templates here, so it takes a little while. So we can see that we've got a 3-wave price action here for wave E, and that's the same with wave D here in 3 waves here, an A and B and a C wave up here, and the rest of the structure is the same for that. So the good news here though is that if we consider this wave 1 up here, which is a reasonably nice impulse wave, and then we've got the A wave, the B wave and the C wave in a 5 wave structure here if you've got a keen eye. So we'll look to build up here. We're already long in this market around here somewhere. We can look to add to this market, but yeah, should be a nice sort of move to the upside. Now we also have to remember that the Australian market has really been lagging the other global markets. So one of the things that I'll also want to have a look at too is BHP, because you know BHP and Rio can take up, you know, nearly sort of 50% of the index itself as well. So I want to be mindful of that. Now, I won't go to the weekly chart just here because, I mean, there is a big bearish picture for this market, but I do just wanted to stay within this structure here from $40 downwards here. So we've got wave 1 and 2 here, all the way down for 3, 4 and 5 here. Now, if this market was going to fail, then it would move back to the wave 4 of 1 lesser degree here, which would be at the 30 mark here, and then we'd see it fail from this point here. So what I would like to sort of just keep an eye on, of course, is this particular level here. We have seen copper, nickel, aluminium, lead, non-ferrous metals up overnight, so we'll see a move up further here. But one of the things that we're looking for here is essentially a 5 wave structure here. If we can get a 5 wave structure like that, then we'll know we'll have an A and a B and a C, and then we'll have another 5 up. If we get 5 here, then we can look at 5 over here, and you know, so they're real key patterns. So 5 waves here, general support over here in due course. That will certainly help the material sector to the upside, and of course we'll keep an eye on those particular metals as well within that, and also the oil market as well, BHP. But you know, you get the general gist here of what the Australian market is doing. So looking at the ASX 200, of course here as a CFD, and just on the daily chart here, well, 8 hour, not a big difference. Just get a slightly more detail in the structure here. But main point here is from this low here, we're staying with a positive structure for the time being, and we'd be looking at this as wave 1 to the upside here, and then the A, the B and the C structure here for wave 2, and then from wave 2 of minor degree we're looking for wave 3 up here. Okay, so it's a long way up, that's fine. At the moment we're also looking up here as wave 1 here at 5,500 here. So we'll end up creating a double top. A double top is never the end of a bull campaign as well, so that's helps us to the upside. And having this here as an A and a B and a C structure here, double tops is a GAN concept. It's never the end of a bull campaign, so we'll see. The other point with GAN too, if you follow GAN, is that the equinoxes and the solstice, so March the 21st or March the 23rd would be a top in GAN terms. Matthew has mentioned, who follows GAN, that would be looking at the 13th of March, so that those dates can be there, and around the 5th of February can be an important turning date too for GAN traders. So, but anyway, the main point here is that we're looking for wave 1 here, wave 2 here, after an ABC, and then up for wave 3 here. So basically we're looking for a classic trading levels pattern across the 5,500. 5 is the second strongest number in the market, so we'll see how we go there. But just drilling in here a little bit, we're just counting 5 waves up in this nature here, so we'd be looking for some type of correction. So we've got a small arrival, small reaction, first high above the level here, and then we'll look for some type of correction here. I've just carried that trend line through here. because it could play a nice support over here. We'll just see anyway. It's not that big of a deal. But the main point here is that, yes, the markets will have some type of correction. So just don't expect them to, to zoom up through here as such. They possibly could, but the main probability is some type of corrective pattern across this particular level here. And just drilling in here, this is where I've got the count from in terms of up for 1 here, back for 2, then 1, 2, 3, 4, 5 here, and wave 4 here, and then 1, 2, 3, 4, and 5 up here. If I've made a mistake here, then it's not a huge mistake. The mistake would be that this would be the 3rd here, this would be the 5th here, this would be 1 here, and the 4th here. So it's not going to make a lot of difference anyway. And if I drill back into here, into the 15-minute chart here, we can see from this point that we've got a little 5-wave structure here for 1 and 2 and 3 and 4, and then little 5 waves here. So we can have a top in here already. So one of the main points here is that we are correcting across the 5-5, and we would use group 1 here and group 2 here as the range and the support and the resistance here. If at some stage we find support on 5530, the top of subgroup 1, then we know that the market's not going to stop at this level and will continue high from that point. But while it's in this band here, this range here, be careful in this market as such. So, okay, now I want to move on to the DAX and then the FTSE, and the reason for this is because the ECB are adding stimulus to this market, and we're going to see the S&P 500 follow rather than lead in this next move to the upside. And as I've mentioned as well, this run up here, we'll be looking into the 21st of March just as a rough guide stick, so we've got February to get through as such being positive. The only real obstacle really is this 3rd and 4th wave here in terms of corrective moves. So in the bigger picture here, we're looking for intermediate wave 4 up to intermediate wave 5 with minor degree 1, 2, 3, 4, and 5 here. For the DAX here, the 11,000 here is the next largest number, so we can expect a corrective pattern across there. Once we've got wave 5 of primary wave 3 here, then we'll be looking for an A and a B and a C here for wave 4 here. So really, in an odd way, this is, well, it's not odd really. If you know the levels, this is trading level 1 here, 10,000. So really this is the most important number here. So this is the arrival, the reaction, and the first high above the level. Okay, so you know that this is a classic trading levels pattern: the arrival, the reaction, the first high above the level, and then the corrective pattern from that point. Okay, just drilling in here though, from wave 1 and 2 here, we're looking for wave 3 to the upside here, up at 11.5, and that would be the medium level here, which is, to me, is more important, oddly enough, more important than the 11,000. But don't get lost in that comment either, as there will be, there will be a pattern across the 11,000 here. But we're looking at wave 1, wave 2, and wave 3 here, and then we're looking for 5 waves in there: the 1, 2, and 3. 4 and 5. So we're in the third of the third here, and that's why we're seeing a lot of strength here. So just to drill in through here, and this is probably the market to trade, even if you do trade indices, well then, the European markets, have the legs rather. So from wave 2 here to wave 3 here, we're looking for wave 1 and 2 here, and we're looking for wave 3 here. Okay, then 4 and then 5 up for this one here, 11,000, and then that corrective pattern across here. These need to go up further, but that's fine for the time being. And then just drilling into this here further, because remember last time we sort of come back on board, we were looking for a break above in this little pattern here, and that's worked out quite nicely really in terms of wave 3 and wave 4 here, and it does appear that we're getting an extension here in wave 5 of 3 here, in terms of 1 and 2 and 3 and 4 and 5 here. I can drill in here a little bit further. So just a couple of intraday things here. This 10,800, 800 is the profit taking number. So expect expect some type of correction within this area here, and then on to 11,000. So just drilling into the 1 hour chart here. I've got this from this wave 4 breakout that we're working through here. We've got wave 1 and 2 here, and then 1, 2, 3, 4, and 5 for the third wave, the fourth wave here, and then we're looking for the fifth wave up here, which would be 1, 2, 3, 4, and 5. So just expect this to fold back into group 2 here, 65, 72, and 80 here, 10,800, and then the other push up into group 1 of 11,000 here, and then the ABC correction, and then further up from that point. So it's just really working through the levels, not a big deal as such there. Just want to put that in place there. I'm just going to save that, which will just take a second or two. Okay, the FTSE. Okay, so just on the weekly chart here, monthly chart, just to get in the bigger picture of things here, we're looking at this market at 6,500. So that's a medium level, 6,500, 65 number. You know, it could be a stock on $6.50 or 65 cents, but that's that number, and it's quite a strong number, unexpectedly. So we're looking at 5 waves from this correction here. So we've got 5 waves up for 1, back for 2, we're up for 3 here, back for 4, and we're looking for the first high above the level here for wave 5 here, and that can take us above 7,200 here. So that's what we're looking at here, but our main focus is just this structure here and breaking that down. So with that in mind, in breaking that down here, we've got wave 3, an A and a B and a C here, and then up for 1 here and back for 2 here on this weekly chart. So we're looking for wave 3, 4, and 5 up through to here. So just with that in mind, breaking this down further here, looking at this here as wave 1 and 2 here, an A and a B and a C here. We're looking for a wave 3 here, and this wave 3 is really panning out quite nicely because you can see the sheer strength of it. So we could say that it's got the personality of a third wave. There's a couple of numbers here that are important. The 6.8 was important. 6.9 is important because it's the old highs here. So 6,900 is going to be important. 7,000 is going to be important, but 7,200 will be more important. But we're expecting it higher above that as well. But we'll just because the extension will be in wave 3 here, that means that wave 1 and wave 5 will be roughly the same length. So we'll just see how all that pans out, and we'll get the measurements for that later. But yeah, so wave 1, an A and a B and a C for wave 2, and then we're simply looking up here for wave 3 up here. Probably not that high, but somewhere in here anyway. We'll just leave that there for the time being. We've got more work to do in here first. So from this wave 2 here, I was looking at wave 1 and 2 to here, then wave 1, 2, 3, 4, and 5 here. Do expect a corrective pattern across the old high here at 6.9, and that would be certainly a target point to look for there. I put this trend channel in here because what a trend channel does in this particular case, when we're working with wave 1 and 2 and 3 here, breaking the upper side of a trend channel confirms that we're in a wave 3. It's a typical thing to look for, and that's the reason that I've put that in there. So just drilling in a little bit further around that top there, this is what we're looking at here at the moment. So we've got wave 3 and 4 here. We're looking for wave 5 to the upside here of wave 3. then wave 4, which can pull back to wave 4 of one lesser degree. But I have to point out that we're in a third wave of a third wave, so all pullbacks will be a little bit shallower than normal. So it's probably a logical step to put the wave 4 somewhere on top here. But let's just see how we extend up into 6-9 here. And this is sort of how I was looking at it here. So if I just open this up a little bit here, let's just take a peek in here. So, well, this is still extending to the upside here actually, because I can see that this is 1, 2, 3, 4, and 5. So this is just wave 1 here, okay? So we've got wave 2 here. So wave 3 here is going to be longer than wave 1 here. So we are going to be looking up higher through here. I should have labeled this here, so apologies for that. But just in a bit of a thing here, if we just look at, if we take that distance here, put that there, so we need to be longer than that there to start with, probably another 60%. So we'll be looking at 1, 2, I can see that we've got 1, 2, 3, 4, 5 here, so a fourth here. So yeah, we'll see that there, we'll see that there. I'll just draw that, probably something like this here, and then a fifth wave up to here as such. So we're looking at something like that there, okay? That's that pattern. So 1, 2, 3, 4, and 5. How far that fifth wave goes, I'm not quite sure, but it'd be something of that nature there, and then we'll fold back in it from that point there. Okay, I'm going to go to the S&P 500 now. Now, the S&P 500 is not moving as quickly as the other markets, okay? And there's a sort of variation of possible counts here. The main point here is that, I'll just go to a bigger picture here. Now, this is going to be a little bit confusing, but don't worry about it for the time being, about all those numbers out in space there. So the main point here is that it has been a tricky count from this move up through here and all of this. Now, I know that this is corrective here. So I know that we're in a corrective pattern across here. So I know that we'll make new highs at some point. Okay, so that doesn't sort of bother me, but we never had a very, or have had a bit of an odd sort of count really, and even this wave 3 and 5 here, I shouldn't put that there just yet either. It's probably even more advisable to put this here as well. So I mean, this could certainly be up for 1 here, back for 2 here, and a third wave beginning up through to here. Or we could have a triangle pattern occurring across here. There's just quite a few variations here, but my thinking is that yes, Pete, you don't understand the wave count, and we put that on the table. But with the DAX moving, the European markets moving higher, then I think that this market, well, I feel quite comfortable with this market following the other markets up for a time being. So I think that we will move higher, and you should look to find supports on certain levels like 2050 as a retested support, and then into group 2 here is 65, 72, and 80, and so forth, and go with the upside because the European markets are in that direction. It's just that we haven't nailed down this particular count in this area through here just yet. Even this wave 5 of 3 here can certainly be further up here, and then looking at a correction here at that point. So yeah, it's just, we can drill into this somewhat. This market, the way that we looked at it before last time we spoke, I know I did point out that I was confused, but coming into this point here, we have a kind of a clear A, B, and C here, and this market was moving up here quite nicely in terms of 1 and 2 here, and going up for a third wave here. Then it fell out of bed here and sort of didn't quite give us overlapping wave structures here. So I'm still really labeling this as a fourth wave here and a fifth wave here. So I'm still moving to the upside with it. And one of the reasons for that is, well, not only because of what the DAX is doing and so forth, but also the Dow Transports as well, because the Dow Transports appear to have a nice 5-wave structure moving up through to here. So just because the S&P and the Dow Jones have, slipped slightly, the pattern itself is still to the upside here. So I was looking at it, I'm looking at it the same as I was last time we spoke in terms of 1 and 2 here, and then looking at this as 1 and 2 here, all of this being the 3rd wave here. I was looking for a 4th wave here, which doesn't really pull back, doesn't really overlap the top of wave 1 in here. So it's still technically fine. And even if it did slightly, I'd still look at it as being a derivative, and a slight overlapping of wave 4 is common. So yeah, the little move that we're looking at through here, it does appear to be an impulse wave in 5 waves, the 1, 2 and the 3rd and the 4th and the 5th here. So it is going, according to plan, and it also leaves this move down here in 3 waves. So we've got a 3-wave correction and a 5 little impulse wave to the upside here. Okay, now as I mentioned, the Dow Jones Transports appear to have 5 waves up here. So I've just put a wave 1 here just as a reminder to myself that, even if we did come back down to here, I'd look at this as a wave 2 here, and then further up to the upside there, or we'd be looking at the triangle thing. But I would stay bullish in this market while we're above 2,000. So I would definitely stay with the bullish market. And that's that really. We just got to kind of work through. So trade the levels, and as I mentioned, we do have a little 5-wave structure to the upside there, and we can drill into that now and have a look at that. So the 1 and the 2 here, this is, let me just double check that. Oh yeah, all of this is the 3rd wave, all 3rd and the 4th here, and this is the 5th wave here. So we would have to expect a corrective ABC pattern from here somewhere in terms of an A into B into C, and then further upside from that point there. It hasn't, normally if it was weak, it would just cover this gap by a couple of points and then fade from that point there. But it is establishing some sort of support here and is looking positive at that point there. And this does count as an A and a B and 5 waves in here for the C wave through here. So I think it's positive. Yeah, and this will be proved once we've got support on 2065 here. But just give it, the new session to establish a stronger support on this midpoint here. Alrighty, well that's it. Thanks for tuning in. Cheers.